Before I dive in, I want to thank Mariana for inviting me on to present today. I think it's a very interesting times, and I think the original discussion was on how our business was changing with regards to the recent COVID virus and so on and so forth. So I thought I'd start there more on a personal basis in terms of what I've seen and so forth. We have been working at home for the past 7 weeks. I actually am working harder now than I was before the virus. I no longer spend that half an hour of driving time each way to and from. I no longer, am picking my kids up or dropping them off on an event. It's logging in and doing work on most of my time. So for what it's worth, I think it's becoming more productive and from that perspective, I think it's good from a work perspective. Also, I think this has removed a need for people to visit each other over kind of long distances. We do a lot of work with Asian partners and investors and clients and so forth also. And this is, for the lack of a better way of saying, a great excuse not to get on the plane for 10 plus hours for maybe 2-3 meetings and a week of time spent in Asia. Love going to Asia, don't get me wrong, but I think going for business, especially for a short trip because of a few meetings has not been very efficient. So our efficiency have really certainly gone up from that perspective. The other thing we are looking at is, and it's showing on the screen, is we've been looking at Kentucky whiskey and looking at investment in whiskey. And the reason for that pivot towards Kentucky whiskey is actually from the digital side. And I'll get into kind of the specific fund and so forth shortly, but basically we're looking at all the blockchain applications and what we can do with them and so forth. And that's an area that we're focused on as an investment firm, and that's something that I wanted to talk about today. We've been looking at blockchain, we've been looking at cryptocurrencies. We have funds that we manage that are exposures to cryptocurrencies for clients, and also we have funds that are looking at blockchain, technology company startups and so forth. Out of the various uses of cryptocurrencies and blockchains, we're seeing a few trends that we think will hold over the longer term. There's certainly the store of value discussion, and a lot of people are buying Bitcoin as a store of value. I think it's great. I think it's the right thing to do with a lot of governments printing a lot of money and so forth, but it's probably not relevant from our discussion today. So I'll set that aside. The second one is payments. We're seeing a lot more efficient payments across borders as borders are starting to close up a bit more. Now, there's obviously a discussion on whether payments are legal or not legal, and whether they're legal or not legal from a legal and compliance perspective, from an AML KYC perspective, from a currency control perspective. And, depending on different people, I think, the opinion's a little different also on whether that is acceptable or not acceptable. I think the US doesn't have a lot of issues when, Chinese investors take money out of China, but obviously China has a lot of issues with Chinese investors taking money out of China. So it's kind of a toss up as to whether that's right or wrong. But, if you had a Chinese drug dealer or a Chinese arms dealer taking money out of China, then the U.S. is not okay with it. So the U.S. is drawing the line somewhere, China's drawing the line somewhere, and, every country draws their line somewhere. And I'm not advocating for anything or not. I'm just saying that payments is becoming a little more mainstream. There's a discussion of how Tether is now, I think, the third largest cryptocurrency after Bitcoin and the ETH has overtaken Ripple. I think to a large extent because it's used as a settlement currency, it's used as a way of transferring, right? And there's no other reason for Tether. It's for lack of a better way, a representation of US dollar, right? And it's not backed really by the US dollar. It's not 100% backed by the US dollar. There's a credit risk as to whether they really had $100 for $100 worth of Tether they have. But it's excellent from a settlement perspective because it's fast, it's convenient. It skips a bit of AML KYC, and I don't think anybody's going to argue with me on that specific point. So, there's that payment discussion. So I'll set that aside also. The other use which is the one we're here to talk about today, or I'm here to talk about today, is on really the tokenization and using blockchain technology, not in the cryptocurrency discussion, but using it really for the smart contract capabilities for it to track ownership and for it to make efficient the transferring of ownership, let's call it that. I think that that is really what that's about. It's kind of like the payments discussion, where transferring payments is easy to do in the blockchain crypto world, and we're just extending that into using that similar infrastructure to be able to transfer the ownership of assets. And the easiest way to talk about it is hard assets, although this technology applies obviously to not hard assets also. What I mean by that is, I think right now the very first step of what people are doing is looking at taking hard assets and putting it on the blockchain and then make it potentially tradable. There are a few advantages to this. One is the efficiency of being able to do that. The second one is the lower cost and from the efficiency of it. And the third one being really from a security perspective, and I mean that in the lock and key perspective, not as in the securities law perspective. From a security perspective, that there is immutable ownership that's a lot more easily represented. And I've spent over a decade in the capital markets, and the immutable ownership is actually not as certain as people would like to believe in the traditional finance world. Let's call it second world countries. I'm not sure if it happens in the US as much, but you have times where there are more stock that's shorted than that there are in the number of stocks in existence. And that comes from kind of people, in multitudes, shorting stocks, and then the other people buying those shorts, and then they turn around and short it or borrow it and short it. So the accounting of ownership is actually a little more gray than people expect in the traditional world. Obviously, in the blockchain cryptocurrency world, it's a lot more open, and therefore it should be more difficult to do that if set up correctly. I'm hedging my comments so that they're not too absolute. Certainly, there are ways to implement properly. There are ways to not implement properly, and when you don't implement it properly, you create new different problems. So what I'm talking about to a certain extent is a little more ideal. I think the first step towards, tokenization is on things like real estate. People have tried. There've been a number of real estate projects done. The most famous of which is the Aspen project, let's call it that. And I think that that's really interesting. And what we're doing is we're stepping in and we're trying to do the tokenization of American whiskey. So I think I've used up actually a lot of my time already, so I'll just kind of jump into that part of it. And I'm happy to get into a lot more details in the breakout room once we have that in the breakout section. Okay. So the reason we started looking at whiskey was actually not because of COVID, but we've since realized that whiskey is actually a great investment in the crisis situation. People actually drink more during crisis than less, which is not really a surprise. They're not drinking in bars anymore. They're buying it and drinking at home, but the actual volume consumed is going up. And we've actually seen that through the financial crisis in 2008, 2009 also. There was there was actually a pickup in 2008. There's a very slight drop, about 1% by sales and less than 1% by volume of whiskey sales, and it's been up ever since. So it's a hot market. It's a great product, and in terms of just being a hard asset, as the world prints more dollars and more of many currencies, hard assets should go up, including whiskey, things that are consumables. What we're seeing really from a pricing perspective is we can buy things for less than $1,000. In 5 years, it'll go up to $3,000 to $5,000. That's a 3 to 5x increase in value that is very stable. That increase is due to the fact that time went by, that the aging process is happening. We're insured so that on the downside, if somebody drops a barrel or if a fire burns down a warehouse, which does happen, we are insured for that value. So the downside risk is relatively minimal. Also, it's a felony to break into warehouses to steal whiskey, and they're very hard to steal because they're very heavy. So, they're security-wise and so forth, there actually isn't, that much of a risk, and that hasn't been an issue in that direction. So, all in all, we feel like it's a relatively stable asset that increases very quickly in value, 3 to 5x in 5 years, very consistent, and we're able to wrap that in a fund and provide that return to clients of over 20% per annum across that period. So, normally investing in whiskey would be difficult. There's an upfront cost, there's sourcing, there's a long timeline, compliance issues, there's lack of liquidity, and so forth. So there are a lot of issues with any individual investors directly trying to do that. They would also get retail pricing, which is much more than what I'd shown in the previous slide, probably 2 to 3x more. And when you're paying 2 to 3x more as retail, you're not going to be able to make money on that trade very well. There's still money to be made, but it's not, so fascinating. So what we've decided to do is we've decided to set up a fund to do this. And our fund is basically a private equity type investment fund that would invest in the hard asset, hold it, sell it. And this is the same as any other hard asset fund. People have done this in real estate. People have done this in crude oil. People have done this in coal and whatever asset that you want. A lot of commodities, a lot of everything. There's that itself is not new. What we have that's new is we're actually going to issue tokens that represent the ownership of the fund, and we're going to make the tokens tradable on some private platform somewhere. And I think that's what makes it interesting. It's a new way to add potential liquidity to the private equity space that doesn't have liquidity right now. Here, I'm talking about some of the benefits that come with it. The easy ones to talk about is obviously transparency, security, it's asset backed, it's convenient, people have access. Liquidity, that word gets thrown around a lot. I'm very careful when I try to use that word. If every single person in the whiskey fund wants to sell their token and there are no other buyers, there is no liquidity. I don't want to sugarcoat that. There's no way to create liquidity from no liquidity. We will provide a certain level of liquidity when we sell the whiskey into the market and create cash. So we can provide some liquidity of some sort, but that is something that I think, I want to be very careful as, this business grows. Once the security token space or the tokenization of hard assets become more popular, I truly believe that there will be more buyers, more investors that come into the field that are comfortable to buy secondary tokens that represent hard assets that are able to take advantage of this field. And once that happens, that liquidity, should be filled up by, future investors or existing investors who are comfortable into a new space. So I'll kind of wrap it up here. I know we've been given, kind of a limited period of time, so I don't want to go too far. With our company, we also have kind of the income funds and so forth that I mentioned before. And, here's my background, but I've already talked about that, so I'll kind of leave that alone. So, I'll wrap it up here with regards to kind of where we're at with regards to the fund.